So do you ever rent a property, do you just get your tax return done and you've got tax to pay and you're surprised by that? Well, you probably shouldn't be, but maybe you haven't heard about the changes. So I'm just in between a number of calls and about the same thing, and I've probably had this conversation 5 times already, and I've sent out 10 tax returns when it comes to rental properties. Everyone's surprised by, I've got a tax bill? What? I've never had a tax bill. Well, you're correct, but the changes that the government brought in 2021 now means that if you've got a rental that isn't a new build, you're only able to claim in the last financial year 75% of the interest deduction, and as of this financial year, the 2024 financial year, 50% of the interest deduction. And everyone kind of goes, yeah, but I don't have any more like money in my bank account than what I did before, so how do I have tax to pay? Well, you still have to pay the bank the interest. So the interest isn't changing, it's actually probably increasing with interest rates. So your interest costs are increasing and you're able to claim even less, which is resulting in a tax bill, which is why you're having to top it up. Now, does this suck? Yeah, 100% it sucks, but these are the rules. What's the way around it? There aren't too many, to be perfectly honest. The government's fundamentally carved most of them out. You can spend money on repairs and maintenance, but you've got to pay $1 to save 33 cents. And if you're doing anything significant, it could be capital, so be very careful of that. So if you've got rental properties, and I feel like we've talked about it a lot, but I will continue to talk about it, you are going to be getting a tax bill, and in some cases significant. If you're paying $15,000 in interest a year, you still have to pay that $15,000 worth of interest to the bank. After April 2026, none of that interest will be deductible, which means that compared to 2 years ago, you'll have at least $5,000 of tax to pay. What makes it even worse is if it's more than $5,000, you enter into provisional tax, which means you're paying tax during the year, and watch some of our other videos to get the lowdown on that. But if you're going to property and it's not a new build, do not be surprised that you've got a tax bill. I've talked about it a couple of times. If you want more details, please hit us up in the comments. We can go through a few examples if you want, but we just need to know what you guys want to know from that point of view. But yeah, look into it. Cheers.